Hello, everybody, and we're live. So thanks for everybody for joining us for Diffusion Digital. I'm Anna from the investment and the Basecamp team in Outlier Ventures. And I want to say welcome to our panel on fundraising in a financial crisis. I have been investing for a little over 3 years now, and I've started from a more generalist and traditional point of view, and then slowly went into Web3 2 years ago, and I've been with Outlier ever since. I've been immersed into the technology through investing with the conversion phases in mind. So we're here with Min from ConsenSys, Chris from Playfair Capital, and Emma from Longhash Ventures. I'm not going to be telling the story, so guys, could you please give an audience a brief introduction of who you are before we start?
Sure. How should I get started or? Sure. Hi. It's great to be here. Thanks for inviting me. So I'm Emma. I'm the CEO of Longhash Venture. We're based in Singapore. We are a Asia-focused blockchain accelerator and investor. We started about 2 years ago, focused on providing venture building support and seed funding to early stage blockchain startups. So since we launched, we accelerated about 18 projects and helped them to raise about somewhere close to $60 million. And yeah, it's great to be here.
Oh, sorry, Chris.
Oh yeah, hi. Again, thanks for having me along to this. So I'm Chris Smith, managing partner of Playfair Capital. We are a seed and pre-seed stage VC fund based in London, established in 2013. We launched our second fund last year, so March 2019. Invested in about 60 companies across 11 countries. So we take a pretty broad approach, which I guess comes from the fact that we were founded, and in fact our sole LP started out as an angel investor. And we are 11 deals into our second fund, so about halfway through.
Nice, thank you, Chris. Min, what about yourself?
Hi, everyone. Thanks for having me, and I hope your diffusion is going well. So I'm Min Teo, based in London. I lead venture investments for ConsenSys. ConsenSys is a global blockchain company building decentralized software and services. We are one of the earliest investors in crypto. So, we have quite a varied portfolio of more than 100 positions of different stages across the stack. So in infrastructure, consumer dApps, enterprise applications. In terms of my background, previously built a fintech startup in the UK, and prior to that was an institutional investor in private credit. Look forward to the discussion.
Well, thank you, everybody. Thanks. Let's everybody thank to Chris, Min, and Emma for joining us today. We have the chat on the side, and we have a Q&A panel where people can actually ask us questions, and they can chat about the topics we're going through. So entrepreneurs are struggling these days with a much slower investment scene and much longer sales cycles. And obviously some industries are doing much better than others. And as a result, I'm hearing a lot of VCs are actually looking at the industries that are doing a little bit better and reshaping their thesis. So it'll be quite interesting to hear from you, Min. Have you actually adjusted your investment thesis in Web3? What is the impact with your portfolio companies within Web3 are feeling now from the corona? Is it as bad, or because it's mostly developer focused, it's a little bit less impacted?
Yeah, thank you, Anna. That's an interesting question. There's quite a lot of nuance. As you said, like a lot of crypto startups kind of operate in a bit of a microcosm relative to the rest of venture, but at the same time, they still are facing the same challenges with the global pandemic, in terms of sort of meeting investors, meeting potential users, meeting clients. So it does feel like a lot of things are put on hold, things are pushed out quite a bit. I think our investment thesis hasn't really changed. Like ultimately, we are, first and foremost, talent investors. So we look to back, the smartest minds, and we see ourselves as long-term partners, knowing that the space is still very nascent and growing. In terms of our portfolio, we continue to have a lot of conviction in our portfolio companies, just with understanding that, things might take a little bit longer than we originally underwrote in our investment case. I think one thing that we're seeing is that there's definitely more of a push towards sort of utility when it comes to a lot of applications. So, what does this really, what benefit does this bring? Does it result in cost savings? Does it result in increased security, better data protection? I think the use case that these startups are working towards needs to be very clarified. Where on the DeFi side, how can you sort of sustain yield in a very low interest rate environment? A big push towards sort of product market fit as well, and with some sort of some sight of revenue generation and business model monetization on the horizon, even if not immediate, which is, I think, in sort of prior years there might have been a bit more patience towards it. I do think that this is generally a big opportunity for crypto, especially for DeFi. And I think we're really excited. We've seen during, even in the last 2 months, some very early stage companies post some incredible sort of traction metrics and growth. I think with everyone sort of stuck at home, anything that allows people to sort of, interact online, have like autonomous trades and managing their wealth in an environment where, you just see there's sort of a lot of inflation looming ahead of us, is super powerful. So while there are challenges, we also see a huge opportunity right now.
Yeah, thank you. Thank you for this answer. So, Emma, I know you're in Singapore now. So we understand that Asia was feeling the impacts from the pandemic a little bit earlier than everybody else. So what are you seeing around there? What have you experienced with your portfolio companies?
Sure. I think a lot of the themes we're seeing quite definitely I resonate with what Ming was saying, right? So basically, people are getting a lot more cautious and are not so willing to look at riskier bet. The valuations of the companies are coming down by quite a bit. And some of the companies that were close to closing their funding rounds and all of a sudden, with commitments pulling away. So those are the general themes that's sweeping through Asia as well. But when it comes to our investment thesis, I think even before the whole pandemic starts to hit, we start to see this kind of sort of like disparaging trends between, whatever is contributing to digital assets and infrastructure are seemingly gaining more traction. So you can still see a lot of projects getting funded in this space and even acquired. So most recently, you have Tagomi acquired by Coinbase. You have Amber Group closed their, pre-A Series A funding, BlockFi, Series B funding. So for us, some of our portfolio companies that are building in this space are actually gaining great traction. Because in terms of their operation model, they're not really affected by the whole physical distancing. And they are one of our companies is closing its pre-A round, raising 5 million in the next couple of weeks. So it's actually been looking quite well for this type of company. But then for the companies that are building protocols, middleware, things that are kind of slightly further away from having a clear revenue model. I think, like Ming said, investors are less likely to take a riskier bet at this point of time. Doesn't mean they don't want to, they're not optimistic, but I guess they just want to have a look and see how things will pan out in the next couple of months. And because of that theme, our most recent batch of acceleration is focused on open finance, so that we can try to generate a bit of synergy and push through some of the companies with clear business model.
Yeah, there's definitely open finance is a very interesting angle. And do you define this a little bit different than decentralized finance, or do you see loads of overlap between open finance and decentralized finance yourself?
I see DeFi as one section within open finance. To me, open finance is any innovative projects that are looking to disrupt the current financial infrastructure. So it might be a centralized platform, but it might be making financial transactions a lot more cost effective and efficient.
Okay, well, thank you. So I think that is part of your thesis, Chris, in Playfair Capital. I know you're a little bit on the more traditional and equity side, but could you please share with us how you're seeing the world these days? You're on mute, sorry.
Sorry about that. We're still in the pandemic, certainly in the UK. So, and we also are really unclear what the post-pandemic recession is going to look like. So I think there is still a huge amount of uncertainty out there, which is impacting some funds and obviously impacting companies in a way we don't quite understand yet. What we're seeing so far, though, is that broadly companies are split into sort of three categories, I guess. You've got companies which are really distressed as a result of the pandemic, so particularly those in the travel or hospitality sectors that are having to do quite significant cost cutting and emergency fundraising to make sure they can get through to the other side. You've got companies which are kind of neutral and aren't too greatly impacted, and then those that are benefiting quite significantly. So particularly in the healthcare sector, we're seeing companies that previously would have taken a year or two to get sign off on a particular contract from, say, the National Health Service in the UK, is taking 2 weeks. So I think it's very much a case of a kind of mixed fortunes at this point across the portfolio. In terms of our general investment thesis, I don't think anything has changed. I actually see more opportunity to do smaller pre-seed deals, and I think actually when we have recessions, typically a lot of new companies get started as people exit traditional jobs. So we do see an opportunity there to write some smaller checks into some very, very early stage companies as well.
Great, that's a very interesting view. Thank you for this. So as we can all see, the challenges are all very different, and it really depends on the use case you're tackling. And as Min and Emma mentioned, if you're on the protocol level, then you're most likely not impacted as severely as somebody in the travel sector. So what would be very interesting to see is, because we're all in very different geographies and we all have slightly different phases in investment. I noticed that in the chat, a couple of people mentioned crowdfunding and token crowdfunding. So it will be interesting to see how the VC is actually viewing this from different standpoints. So Emma, would you like starting off on this? Thank you.
Yeah, sure. I think from our perspective, we still think token fundraising is one of the very innovative ways for companies, early stage companies, to raise money and also align interest among various stakeholders, right? Can be supplier, can be future customers. But I think during the ICO hype, it was kind of taken too far, and the regulations are catching up. And before a balance is strike, I think people are kind of burnt in many ways. So even regardless of whether you're retail investors or VC investors, people are just kind of not so interested in tokens so far. And you look at the token market right now, the performing ones are really, BTC and a few major mainstream top cryptocurrencies, right? A lot of the bottom 80-90% are not really performing. So I think it's not a really good time for people to look into token financing. So I would say there's not much appetite for it, at least from what we're seeing in Asia.
Thank you. And then, Min, what we're seeing in Europe and I guess the US, because what I've heard, especially on the US side, is some people are actually getting quite interested in token investments again. So is that something that you're actually exploring these days?
I think, in some sense, like especially like with regards to Ethereum, the ability to represent value on an ERC20 token is a very powerful use case and one that has persisted. And, fundraising is a very important implementation of that. As Emma mentioned, I think there are a lot of sort of, regrettable events of 2017. And I really hope that, we've learned lessons from that. And ultimately, it's not about, while regulation is very important, I think what it boils down to is really consumer protection and also fair practice, because if retail investors get burnt, they leave the ecosystem takes a step backward. So those are certainly situations that we want to avoid. But I think as we sort of start calibrating the models and adapting them to ensure that, there's sort of like fairness in pricing, there's, equal distribution, there are actual, sort of value capture mechanisms in the token design. I think this continues to be a very exciting space that people should definitely watch, though, I think there are a lot of disclaimers all over the place that this is really for sophisticated participants who really understand what they're getting into. One of our portfolio companies, Gnosis Protocol, is working on a sort of new token launch mechanism for a lot of sort of fair pricing to prevent any sort of front running, for example. And I've also seen some really interesting launches in the last few months. UMA did a token launch on Uniswap. We've seen personal tokens on Zora. I think these are all, we still view this as being very experimental. And if you look at a lot of the prices of those, they've actually held up okay in the, few short months. So, we have to watch and see. But ultimately, I think it's something that, brings more funding to the space and funds a lot of the innovation and growth of blockchain startups. So generally is a positive.
Great, thank you for this. And I guess, Chris, you have a much more institutional view because, as you mentioned, you're coming in with equity. So, have you discussed internally, or have you thought personally about how institutional investors can actually start investing in digital assets, or you think that's a long time ahead due to regulatory uncertainty?
I think the sort of comment about the bad practices that happened historically is something that lives on pretty long in the memory, unfortunately. So I think for us, we are, we still believe in the traditional equity funding model because it's, about so much more than capital. It's about the support and help you can offer the founders, to help build their business. And we're particularly strong on that. We do get as involved as the founders need us to do. So I think it's a really interesting, and that, put it in with crowdfunding as well. I think the more alternative sources of financing that are available for innovative companies, the better. I think the bigger question right now is, actually how much capital is around, because there are a lot of studies coming out saying that, angel investors are still investing and crowdfunding is great, but I don't think that's the reality. And particularly from the institutional side, I think VC funds, again, I generally group into kind of three categories. You've got funds that are distressed and probably terminal. There are funds that definitely won't be able to raise again as a result of this crisis, particularly those that raise on a sort of fast, rapid cycle. So if you raise every year, particularly if you're using some of the tax breaks in the UK, that's going to be really tough to get money out of your LPs. You've got funds in a kind of middle category that are, thinking about their portfolio, doing less new deals and conserving capital. And then you have a group of funds that are still investing and doing stuff remotely, which is happily, we're in that category. But I think anything that can bring more capital into support fast companies is a good thing. But I think there's some way to go to get back probably the trust, actually, for token issuances.
Yeah, I feel like adding one point. I mentioned earlier about regulation catching up, but I think another most important factor, if not more, than regulation catching up, is actually the fundamental value of the projects of the token needs to show, because right now we're still some time away from mass adoption, right? So even though a lot of those projects are building with grand vision, but if you look at users, if you look at transactions, a lot of that is not able to support the token's value. So I think until that happens, then I think people will start to regain confidence in token fundraising again.
Yeah, thank you for these views. That's definitely it's definitely very interesting, especially to people that are not institutional investors and are deploying their own capital. I guess they're looking at everything with quite different eyes than what we're looking at. So thanks for this. And then I wanted to touch on another point that's very related to our original topic with the fundraising in a financial crisis. So let's start with Chris. Chris, you set up your fund in 2013. That was 5 years after the last global recession. So what do you think is the role of a VC during a crisis and during the recovery? Because you started investing in recovery, but now we're heading into another crisis. So it'll be interesting to see that.
Yeah, it's an interesting question. I mean, I think the role of a good VC is probably the same, actually, regardless of the economic conditions. So I think we should be identifying what we believe are the most promising businesses and then wrapping them with resources beyond the capital. So I mentioned before we get very hands-on, but we have a team. We've got an ex-recruiter from Google and Facebook who specifically works on hiring, which is probably one of the toughest things founders have to do between seed and A. I help with sales and marketing and PR. So we cover what we think are the kind of important bases that founders need when they're building a company to get to the next round of funding. So I think that's the same regardless of where you are in the economic cycle. I think the main difference now actually is that founders need emotional support. And it's something that doesn't really get talked about a lot in the context of investment because it's quite a sort of a hard world. But what I would say I've done most since the lockdown started is have calls with founders who are, they know what they need to do, but they're finding it tough to furlough or to make redundancies or to tell their whole team they've got to take pay cuts and try and maintain morale and momentum. So I actually think being a kind of a sounding board and offering emotional support to founders is probably the biggest value add that we have at the moment.
Yeah, that's definitely. I agree with you that a good VC will be doing very similar things regardless of if there's a crisis or not, and they'll be pretty hands-on regardless or not. But I assume that right now it's even more crucial, and founders, I guess, should be asking for even more help, and basically should not really be disappearing. So that's quite interesting. And then in a more Web3 perspective, Emma, what do you think should be the core support for these projects, in case they're tokenized or not? I guess that doesn't make a massive difference for you.
Yeah, so for us, we started as an accelerator. So I think our setup is a lot more hands-on, and we have a very structured process in terms of helping projects that we take in with refining their value proposition, identify go-to-market partners, and finding mentors, and especially fundraising. So we get really, really hands-on, and we've already set up a pretty smooth process to do that. So I think during the time of crisis, it's just about keeping, same thing as Chris was saying, right? Just having more regular check-ins with the teams and really helping them to provide emotional support and helping them to analyze the situation, what is the most important resource that they need at that point of time. So we do a lot of that. And also we've built a mentor panel of about somewhere between 50 to 60 mentors spanning from leading investors in Asia, such as Fundraising Capital, Hashi Capital, Temasek Blockchain Lead, to corporate partners, Standard Chartered, UBS, to industry people. So I think it's really about connecting the founders to the right resource and helping them to push through.
Yeah, thank you for this. And then from a ConsenSys standpoint, I know you have a lot of different entities where investments is just one part of what you're doing. So could you please elaborate a little bit more on how you see the help that a VC should provide for a Web3 startup in a financial crisis?
Yeah, definitely. And I think what Chris said really resonated, and Emma as well. Like, you do have to play therapist a lot of times, and sometimes that's the best way you can support. Like, I spent a couple hours this morning talking to a few portfolio companies in the UK about furloughing, about like the future fund, like what might it mean for the government to be an investor on your cap table? Like, business planning in a time of uncertainty is not easy, and in some sense like counterproductive. So we're really focusing on working very closely with our portfolio, some of whom sort of, span from very pre-seed companies to Series B companies on, cash management and just sort of survival. Like, okay, what do you need to really take you to sort of survive for the next 24 months if, all these assumptions don't actually pan out the way that you anticipated. Seeing runway as like, sort of how you get to your next milestone, and assuming that the next milestone is pushed out before you can fundraise is something that we've been working really closely with our portfolio companies on. I will say that two things have really popped up. The first thing is, how do you sort of growth hack in this environment? Like, assuming that, you don't really have that many in-person meetings, you don't have conferences, you don't really have as much travel. How do you still manage to, get users, close deals? That's something we're working very closely with our companies on. It's very different depending if you're a consumer dApp or if you're actually like, an enterprise software company that's really trying to get in the doors of like, MasterCard and PayPal and all of that. I think the second thing that we're very focused on is that, I think the space is working at an accelerated pace. You're seeing a lot of, launches of layer 1 protocols, and a lot of highly anticipated, like, launches. And we're seeing teams iterate very quickly as well. So our job really is to almost like stay on top of it all and try to help synthesize a lot of it for our portfolio companies so that they can actually map themselves and see how they're doing to market. As a founder, I think sometimes it can be quite difficult because you do want to be very focused on what you're building. You want to have blinders on, but it's important to, have like a standing as like where you are to market and what other people are excited about. So that's something that we've been spending a lot of time on, because I think it's most helpful to provide that sort of market research to our founders on how they can stay competitive.
Yeah, definitely agree. Market research and growth hacking techniques and community building is something that really resonates with us at Outlier as well, because we're invested in some protocols, but then we've done investments higher up the stack, including the application level. So that's something we're doing with our companies on a pretty regular basis as well. So I know we have 2 minutes left. So thanks for joining us today. That's been great. Thank you, Chris. Thanks, Min. Thanks, Emma. I know you're extremely busy, so thanks. And then thank you to the audience. It's been we've had some great questions, and it's been a great half an hour. So after that, if you'd like to network with each other or with any of our speakers and panelists, please head to our Slack channel. That should be down below in the chat. And yeah, we'll see you there. Thank you. Thanks, everybody.
Thanks,
Bye.
Hannah. This was loads of fun. Bye,
Yeah,
everyone.
great. Thank you. Bye.